It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, coronavirus. The rapidly expanding pandemic that is the coronavirus threatens to disrupt global trade and commerce as we are 1 month into Q1 of 2020. An estimated 55 million people have been quarantined in an attempt to slow the spread of the virus. Daily cases are growing at a 20% rate, and the total affected count is at over 20,000 as of February 4th. Over the past 5 years, China has contributed nearly a third to global GDP growth, and with many factories and retail establishments in China shuttered, for now, pressure on growth estimates could be expected. Number 2, yield curve. As a result of declining energy prices due to lower forecasted Chinese demand and thus lower inflation expectations, the 10-year minus 3-month treasury turned negative as we rolled into February. This is notable as yield curve inversions have preceded the last 7 recessions with a typical lead time of 12 to 18 months. We did get an inversion last May, which sustained through October, but with an accommodative Fed and an expected rebound in global growth, the yield curve steepened. We are watching the fixed income markets as well as the labor market for signs of increasing risk of recession, as early indications point to rising risk despite healthy market gains. Number 3, Fed taper. With the U.S. Federal Reserve currently on hold with rates, the focus is on the stability of funding markets as they taper liquidity. A disruption in funding markets saw the Fed inject liquidity last year, and these operations have continued up until today. They will begin to taper in February with a tentative path towards completion in April. Withdrawal of liquidity in the past has led to volatility, so we are monitoring the Fed's navigation of this plan. Markets appear to be introducing doubts as rate cut odds have risen significantly. A rate cut is fully priced into the September meeting. Interestingly, the Fed has never cut rates 4 times outside of a recession, and we already saw 3 cuts in 2019. So perhaps further accommodation shouldn't actually be welcome. And that's been your Market Minute for the month of February. Thanks for listening.